All right, guys, how's everyone doing? This is Paul Singh, Bulls on wallstreet.com. 21 stocks to watch before the new year. I usually do my webinars on a different platform. First time on YouTube Live. So still figuring things out here. I cannot see the chat, so bear with me here. All right, I think I just did something there. Okay. There we go. What's going on, everybody? You guys can hear me and see me okay? Just give me a shout out if you can. What's going on, Crypto Shredder? My mini-me from Halloween. All right, there we go. It's like we got a bunch of you in here. All right, good. You guys can see me. All right, fantastic. And you guys can see I ditched the 49ers cap. I'm wearing the Warriors cap today, but I felt a little guilty, so I do have the 49ers sweatshirt on. I got to support Jimmy G. He's turning around the 49ers. But today we're going to talk about stocks. I know everybody's into cryptos, and we're actually going to talk a little bit about blockchain because blockchain is invading stocks right now. And actually, there are some bigger gains going on in some of these ridiculous stocks than there are now in the cryptos. I mean, you guys saw LTEA today. Long Island Iced Tea changed their name to, was it Long Island Blockchain? And all of a sudden they were up 200%. So that's insane. That's right. Crypto Shredder, NXTD. I had one of my best day trading weeks by far of the year trading LFIN. NXTD. I will say LFIN was a little scary because I did get caught in a couple of halts, but I didn't get caught in the big one around 126 that went back down to, what was it, 70? But we're going to talk about low risk ways to, so that's right, Ryan, iced tea turns to crypto. Insane. But we're going to talk about low risk ways to trade some of these cryptos, or not cryptos, blockchain stocks. So very different than what Kanal's doing and what Crypto Shredder are doing in terms of actually trading cryptos. We're still trading stocks. It's just they happen to be related to blockchain. And we're going to talk about hybrid strategies. So basically, day trades that you can turn into swing to lower your risk. Basically, you're going to bank a gain, and then if it gaps against you, you're okay. That's the premise behind it. So that's a way to potentially swing them. Now, if you're a part-time trader, and that's a lot of what we gear towards here on Bulls on Wall Street, it's a little difficult to do. You do have to watch them a little more closely and watch after hours. But we'll talk a little about that, but that's a minor part of what we're doing. We're basically talking about trends going into the end of the year and early next year. So in the webinar around Thanksgiving, we talked about December seasonality, and it's playing out exactly like we talked about. And actually, let me share my screen here with you. And I don't know how to keep my face and screen on at the same time, but I think you guys want to see the screen more than you want to see me. So I'm going to switch over to my TC2000 here. Let me know if you guys can see the screen. Okay, it looks like there's some issues here. All right, can you guys see me okay? Or at least, are you seeing my screen or are you seeing me? Sorry about the little hiccups here. So screen or me? Okay, good, you see the screen. All right, fantastic. Okay, I've got on UA, this is gonna be one of our stocks here. Let's take a look at the market. Now, we talked about in November, good, screen. So we talked about this in November, that we were expecting December seasonality, and pretty much exactly what we talked about is happening. So right in here, we were saying early December, expect a pullback. Exactly what happened. And then at some point mid-December, expect a run, middle or late December. We've gotten some of that run now. Now we expect more going into the end of the year. The premise behind this is the hedge fund managers, the institutions, they want to look good to their clients. So even if they weren't in a stock, like say they were not in Nvidia all year, which has been, one of the big movers of the year. You can see here, started in January at around 100 and went up to 200. So 100% move. The clients are going to say to them, hey, why aren't you in Nvidia? So what they do is, to kind of hide the fact that they weren't in it, they just load up on these stocks at the end of the year and say, hey, clients, we're in Nvidia. So you see a lot of that. So you want to focus in towards the end of December on the stocks that have been strong throughout the year, and they tend to get these little pushes towards the end of the year. So keep a lookout for that. And that some of what we're going to talk about today is based on that. And there's a lot of other different strategies too, but most of what we're going to be doing is stocks that have shown relative strength this year. So I've got a little indicator here that goes over relative strength compared to SPY, or the S&P 500. And you can see every one of these stocks is showing relative strength to SPY. So they've been beating the market. And those are the kind of stocks we want to focus on towards the end of the year. Now, this isn't the only strategy we ever trade. I trade a lot of beaten down stocks. But towards the end of the year, we want relative strength. We want stocks that have shown strength. And every one of our stocks has done that this year. So we're going to talk about that. But going back to that December seasonality, we got the dip just like we expected. And now we're getting that little run. It hasn't been a huge run yet. And a lot of trade report members, you guys, most of you know that there's a trade report service on Bulls on Wall Street, which is what I run, the swing trade alerts. There hasn't been that huge run yet. And this week, I have not made a trade. So I was pretty active last week. So I think there were 4 or 5 trades, all of them successful. We're in 2 still. That's NVIDIA and FSLR. But this week, with the first report of the week, I was pretty bullish, and I said I'm probably going to enter something Monday or Tuesday. I did not do that. Now, I have been in more aggressive accounts trading some of the junk stocks that have been moving, but that's not really geared towards the standard swing type trade. That's more of a hybrid day swing strategy. But for the regular swing, it's been a little shaky right now. These 2 days, basically these 3 days here, have consolidated. At this point, what I'm looking for, and we always start with the market analysis, by the way. So we've got stocks we're going to go over, but the first thing I always do is look at the market and look at the sectors, and that's going to guide the way I'm trading. And too many traders skip that step. They just focus on stocks. They see a setup, they just trade it. You can't do that. You need to have the market and sectors aligning with you, and that's what we're doing here. So we've been cautious this week. We've been waiting it out, and basically what I'm looking for now, and I have 2 positions, so it's not like I have nothing. I still have 2 positions that are sitting there. NVIDIA is up about 5 points, and FSLR is up about 1 point right now from our entries. But we want to see here, do we hold the 9? And the 9 is a key level for momentum swing trading. Do we hold the 9? SPY has been holding the 9 ever since September. Even when it looks like it's going to break down, it comes back up very quickly. So we want to see that. And then obviously, yeah, you're right, N33, NVIDIA is kind of indirectly related to Bitcoin as well. And that's why some of its move has been related to, but also the entire semiconductor sector has been on fire this year. But back to what we're supposed to be talking about here. Break of a high. If we break the high here, I'm going to get very aggressive. I'll go from 2 positions to maybe 8 positions. So this week has been kind of slow. We're waiting. And then we may get really aggressive even tomorrow, next week. We'll see. And even if it's holiday week, most holiday weeks are slow, but around Christmas and New Year's, we do see some big runs at some point. So that's what I'm looking for right now. Hold the 9, break out over the high. One of those 2 things. Also, we're watching the T2108 very closely. We want to see broad-based moves in the market. And if T2108 is lagging, that means there's not a broad-based move. Now, we're seeing some broad-based moves right now. And what I mean by broad-based moves, well, first of all, let me tell you what T2108 is. For those of you who don't know, it's an indicator in TC2000 that measures what it says right here, percentage of stocks above their 40-day moving averages. So right now, we're above the halfway point, which is good. And we're at all-time highs, so we actually would expect that number to be up here around 77. So we are seeing a little bit of a negative divergence. But if we analyze it a little further, we know we're coming off these lows, and we've had a strong move from 40 to 60 here on this indicator. So I would say right now, and then the other indicator we'd like to use is compare what IWM is doing. IWM is bouncing, and IWM tracks 2,000 stocks, more of the smaller stocks than S&P 500 does. So we're going to get an idea of whether the market is broad-based in terms of its movement, and we're seeing a little bit of that right now. So I think it's a good signal going into the end of the year. So we've got T2 108, which is positive. We've got IWM, which is starting to show a little bit of relative strength, not a ton, but I think we're getting a good signal there. So stuff is aligning to make us want to get aggressive if the Qs, the NASDAQ here, show strength and SPY does. So that's a little primer on our kind of overall outlook before we get into the actual stocks we're going to look at. The other thing I do is pay attention to the sectors that have been moving. Now I have this sorted by relative strength the last 30 days. You can see here, number 1, department stores, number 2, apparel, grocery stores, footwear. More recently, if I did the 5-day, you would see commodities, energy, steel, metals have been moving. Those are all things we want to be paying attention to. So we've got some conflicting kind of messages here because December seasonality is going to be what's worked over the year, which really are lagging a little bit right now. So the Facebooks, the Amazons, the Nvidias, they actually have pulled back a little bit right now. And what has moved is some stuff that was not moving before. And I think part of that is the tax plan. Part of it is, surprisingly, the potential for interest rate hikes and tightening. And we don't get into fundamentals too much, but that's actually good for financials, which ends up being good for housing, which ends up being good for retail. So that's why we're seeing all of these things moving together. And I think the commodities, especially the steel and infrastructure stuff, is related to the idea that what Trump talked about in the beginning, working on infrastructure. There's some talk that that's going to be in play now, and obviously that's good for steel and metals and all that kind of stuff. So that's probably why some of that stuff is moving. But we're watching that stuff on the daily focus list. We have a bunch of those stocks listed. On the stocks we're watching today, I don't have a lot of them, but they are represented. So each of these areas, we do have a footwear stock, which is UA. We do have a retail stock, which is Macy's. We do have metals, which is FCX and X. So they are represented, but we're focusing more on what's worked over the year. So let's get to it now. If you guys have any questions, I'm trying to keep an eye here. So shoot me an email if you do have, or shoot me a message in the chat here if you have any questions. I think this may have froze up here. All right, are you guys seeing me and hearing me okay? All right, I think my chat has froze up here, but hopefully you guys can hear me. I'm going to get to the stocks now. Eric, if you're still on, can you message me, send me a text just to let me know everything is good. Sorry about this, guys. First time doing the YouTube live here. Okay, looks like I got some messages going through now. All right, okay, let's get to the stocks here. I'm going to skip around here. I said 21. There were 40 I wanted to go over, and I narrowed it down to 28. First thing I'm going to do is really quick. We're not going to go too in depth with this, but let's talk about some of these blockchain related stocks. So we've got NETE here. And let me tell you what I've been doing with the swing on these. And I wasn't able to do it today because today it closed down real big to where I wouldn't want to hold on. I was out of this very early in the morning. But yesterday, what worked yesterday could work on a different day that's gapping up. What I've been doing, and let me pull this back to yesterday. We're looking at the 5-minute chart here. What I've been doing is day trading it in the morning. And once I get the profit that I want, so whatever strategy you're using for day trading, I have a gapper strategy I use. Some of it is very similar to what you guys learned from Canal. So let's say you're using some strategies Kunal has gone over. Maybe you went long on the break of the 9 here, or the break of the VWAP, whatever it was. You took your profit, and what I've been doing here, you have to think about how far can this stock gap down, and relate your position to worst case scenarios. So let's say you had 1,000 shares when you day traded this. You take your profit, maybe you take 800 shares off, 900 shares off. Let's say you take 800 off. You leave 200 or 300 on, and if it gaps up the next day, you're going to profit on that from a swing trade. And that's basically all I've been doing for the swing. So with Riot, with NETE, what's the other one here? SCS. That's basically what I've been doing. These hybrid swings, taking the big profit on the day trade, and then for the swing, if it gaps up big, you can get a big profit even on that small position size. And if it does go against you, which so far they haven't gapped down too big in the mornings. But if it did go up against you, you have that buffer because you already got a bigger profit on the day trade. So you're always thinking about worst case scenarios and how to mitigate risk, and that's the way to do it. So that's what I've been doing with the blockchain. So NETE, and then for the day trades, it's basically the same old strategies. Just because they're blockchain, nothing changes. When they get extended, wait for the pullback, and if they start to run again, just jump in. It's been easy. Basically, high breaks continually, range breaks continually. If you do have access to shorting, there have been some amazing short opportunities in some of these. But that's all I've been doing with the blockchain. So in this list, we'll go over them real quick, but that's all you really need to know. Now let's get to some of the standard stocks we play, and let's start with the FANG stock. So Facebook, let me get back on the dailies here. Facebook here, and we're going to pull this out over the year so you can see the extent of the move here. So going back to January, talking about stocks that have led. Facebook has started the year at 115, made a high of 183, and now is at 187. So what are we looking to do? How are we looking to trade Facebook going into the end of the year? What is the trigger to get us into Facebook? So the first thing I'm asking myself is this a stock I want to be in? Trend is good. I always look at volume pattern to let me know, are the institutions buying? We want to track what they're doing, especially with these bigger stocks, not so much with the lower floats. But with Facebook, institutions have been making obviously big buys here. We see the big, you and I aren't creating this 20 million volume stock. So definitely there's interest by the institutions, and that's who we want to follow going into the end of the year. So now if we get in a little closer, what is going to be the actual trigger? For me, it's going to be one of two things. I can either be aggressive, and if I see strength here, basically it's below the 9 here. If we see a remount of the 9, and let's say this thing starts to get up here around 179 or 180, I will jump on it. So that's pretty much going to tell us that the idea that it's failing at the 9 is basically over. That setup is invalidated, and we're getting set ready to run. Now, if it floats up and doesn't show a lot of strength, I'm going to be more hesitant, and then I'll wait for the break of the high, and that would be 183. Now, my guess is if we had to play the break of the high, it won't be the year-end play. It might be, the week after in January. So, but those are the two things I'm looking for. There's essentially two triggers here. They're continuation pullback or breakout play. So when I say continuation pullback, I mean trend continuation. There's a trend in play that has pulled back, and now is it ready to continue? And that's been a bread and butter, easy setup. You barely have to think. Just watch for these triggers, and it's been very successful. So break of the 9 or break of the high. That's going to be your trigger with Facebook. And you're going to see this theme over and over again with a lot of these stocks. Netflix. Now, Netflix is a little different in that it's not showing as much strength right now, but it's interesting that overall it has been a stronger stock than Facebook. If we go back to the early part of the year, we've had better breakouts to play. We've had better trends. When it moves, we've had more explosive moves. So my preference is to trade Netflix. So obviously we have to hit the trigger. And unlike Facebook, where the 9 was above the 50, which is always a good signal, the 9 is below the 50 on Netflix. That's a little concerning. You want to see that 9 showing a lot of strength, showing a really strong trend. Now, the positive is the last time it happened back here in July, it remounted very quickly. And I'm willing to bet that it would remount again very quickly. So what's the trigger here? Now, instead of the 9, we're not looking at the 9 here. We're looking at the 50-day moving average. So the exact number is 193.25. Let's say 193.50 to 194. If Netflix can get over that level, we're going to jump into this stock. That could happen tomorrow. It could happen Tuesday, Wednesday, Thursday, whenever it is, either tomorrow or next week. Netflix is going to be on our radar. And I would imagine, just like last time, you see what happened last time, you see what happened every time this has happened. And these things play out over and over again. Every time we've got this remount, we've had a big run. And I don't see any reason why that wouldn't happen again. So we jump in at 193. I would even set normally I set the target at the high. Since we've already tested the high once, I would imagine maybe we're going to break the high here. So maybe we could even hold through the high. So get in at 193, potentially to 201, or maybe even an all-time high breakout, and we stick with this for a bigger move. We'll reassess that as the stock reaches that level. So that's Netflix. Now, Google and Amazon. Now, I know a lot of you guys are afraid to trade these stocks because they're $1,000 stocks, and you might have a $5, $10, $20,000 account, and you think you can't trade it, but that's not true, because these things will move pretty explosively. So you want to think percentage gain. Here, if you entered at 950 and the stock is at 1175, that's a pretty good percentage gain. You're looking at over 10% in a pretty short period of time. So just because it's high priced doesn't mean you can't enter. We could enter here at 1175, and this thing could run to 1275, and you're sitting on a big gain, even if you only have 20 shares of it. So don't let that deter you. But if you still don't like trading the $1,000 stock, just go with Netflix, which is cheaper, Facebook, which is cheaper. So you have options there. So now here, this is showing actually relative strength to Facebook and Netflix. And we've got the fact that it's related to retail. So we have that, and we know retail is strong right now, which is why Amazon has been showing relative strength to the other two. So this is probably the better play going into the end of the year in that regard. And the way I would play it here is we're right at the 9. Again, if we get that bounce at the 9, I wouldn't even wait for the break of the high. With this one, we could just jump in right here. Let's say we want to see a little bit of strength. Let's say tomorrow this thing's at 1185, 1190. I'll most likely jump in tomorrow. And we're so close to the high here. We could see a break with Christmas coming, New Year's, all the excitement about shopping. We could see a big move here. I'm sure there'll be data coming out on Amazon. And there's already been indications that this holiday season has been really strong for it. So Amazon, very high on my focus list. And then Google, also showing relative strength, pulling back to the 9. I would, again, same thing. Wait to see if that 9 holds or the break of the high. Now, with Amazon, when it does break the 9, this has been a trend throughout, through Google. This has been a trend with Google. When it breaks down below the 9, even though eventually it's going to pop back up, you do get these quick pops down. So if you're an aggressive trader and you like to short, a close here. So we're looking at these both ways. We don't come in with any preconceived biases. We're just going to do what the price action tells us. So with Amazon here, we're looking for the long play, especially going into the end of the year. But if we break down below, say, 165, 160, somewhere in there, I wouldn't hesitate to short this thing. And maybe you could pair trade it. You take Google as, I keep saying Amazon, you take Google as a short and write it down to maybe the 50-day moving average, and you take Amazon as a long, and you pair trade these things. So that's a possibility here. My preference would be to trade it to the long side, but that is a setup that could give us a quick pop to the downside. And those of you who trade options, you could even get more leverage on this type of trade here. All right, so that's the FANG stocks. Now let's get to all the other good stuff here. MDGL. Now this is totally different than the FANG stocks. This is more of the junk stock here. You can see here it's already made a huge run from about 13 to 92. We got this huge breakout here, consolidated. Now, what I'm looking for here is not really a pattern, but just a break of that round number 100. I think if we break that round number, we could see a nice quick pop. Now remember, this is a very low float, 3.4 million. A lot of manipulation with these type of stocks. You can get huge moves in either direction. So one, you're going to trade it smaller. You're going to manage your risk vigilantly. And if you're part-time trading and you can't look at the screen 3 or 4 times a day or look at your phone 3 or 4 times a day, you probably don't want to trade it. But if you can manage to watch it a little bit, or maybe just set a hard stop, although I don't like to use hard stops with stocks like this because of stop gunning. But if you can watch this, watch for a break of 100. It's already tested that level on the day of the breakout. It went right to 100. It actually went to 101. So it tried to break, pulled back. Now here, I actually thought this was going to be a big move down. That didn't happen. So that's another positive, that rather than crashing here, it consolidated. Tested the 9, and another really strong positive for this stock is it held that 9. So now we're watching for 100. If it breaks 100, I will likely be in this stock. Now, if you're more aggressive, you could even get here at 92. Take a small position, use a 10-point stop. This thing could run to 120, 130, 140, and you're looking at 3 to 1, 4 to 1, 5 to 1 on your risk reward. Okay, so that's what we're looking to do with MDGL. Now, this is not year-end seasonality. This is basically just a setup we're looking to trigger in the next few days. SSC is the other blockchain stock we were talking about. I won't get too much into this other than the only way I would trade it as a swing is if I'm using that hybrid strategy where you day trade it using the strategies you've learned from Canal, some of the stuff that I've mentioned. And if you can get book a good profit on your day trade, then hold a little piece of it for the swing. Now that goes counter to what I know Canal has taught. Canal doesn't like to turn day trades into swing trades. And I'm the same way. For 95% of my trades, I would never do that. But with the opportunity to make these big gains on the gap ups, I would make that exception here. But again, you have to do it really small, be really careful. So we have a limited time exception to that blanket statement that we don't turn day trades into swing, but we have a strategic reason to do that with SSC. All right, let's get to LGIH. Now, this is one of those low float housing stocks. Residential construction, only 12 million, has been on fire in 2017. If we look at that relative strength number that we were talking about, 251 on that number. So a very, very high number there in relative strength, meaning it's been crushing the market. So if we see here, back in January, this thing was trading right around 27, and we're up to 73. So we're talking a 200% move. And I know a lot of you guys, when you see a 200% move, you think it can't go higher, but it definitely can. The stocks that are going to go higher are the ones that have proven that they're volatile, proven that they can move. So if housing starts to move again, this is the one you want to jump on. You could go with some of the safer ones like DHI or Lennar, but let's look at the percentage gains here. Let's say you trade Lennar, which is also a nice mover here. But how far has this moved since January? This one has not even moved 50%, about 50%. So why in the world would I trade a stock where I have potential to make 50% when I can trade another one in the same space that can make me 200%? So that's why right now, LGIH is basically, even though I love all the housing stocks, this is the only one that's making my focus list because this is the one I plan to trade. So how are we going to trade this one? Now, this one's a little trickier because it is at highs right now. So In this situation, you can do one of two things. It looks like we've got Kanal here answering questions in the chat. Fantastic, because I have a hard time doing three things at once. So we've got Kanal here answering the questions in the chat. When I'm done going over the stocks here, I'll answer some questions as well. Going back to LGIH, when you're at all-time highs, it can be difficult to enter. So you can do one of two things. You can just say, you know, we've consolidated here. I want the potential for the big gain without having to wait for a pullback that might never happen. So you could just enter here at 73 and maybe place a stop. Give it some room under the 9 in case it tests like it did here, so maybe you have to take a little smaller position. You enter at 73, place that stop around 70, 69 or 70. And you know, this, you've seen the kind of moves this thing can do. It could run from 60 to 75. It could run from 75 to 85. You could play it that way. What I'm looking to do is wait for the pullback. Now, the risk in that is sometimes you do miss some of the moves, but I'd like to get value on this. So if this thing can pull back to maybe 70 and then show strength, that's what I'm looking to do with LGIH. So the plan with LGIH is not to enter here, but wait for a pullback. And this might be a pullback candle here. A little bit of a tight, kind of bullish engulfing. Maybe it starts to pull back here. If we get that, I'll look to enter LGIH. All right, NETE, we already talked about the blockchain. RFP, it's in paper, a pretty boring area, but look at the move here. You wouldn't expect a paper stock to be doing this. Since January, it was trading at 4. It's up to 10 now, and more recently, it's made a 100% move. Now, we had the breakout here. So we're already kind of in the midst of a breakout, so I would not enter at 1085. And this is not one to probably trade right now. So the end of the year play, probably not, but early January, I would wait for a pullback, another pullback or another consolidation like this, and then play the break. And the way our FP got on our radar was this earnings breakout right here. So earnings breakout, so we know it's got good earnings. We know with all this volume here that the institutions like it. It's not one of these stodgy paper companies in the sense that it's only a 59 million float. So it doesn't take very much volume to push this thing, which is why it's moved faster than some of the other paper stocks. And the next move, we would expect to see the same type of move again. So if we can get a consolidation here between 9 and 10, I would look to enter on a break, and then maybe it runs to 13 or 14. FP. Now let's talk about FSLR. I'm actually in this stock right now. So this is one of the two positions that I'm in right now. Solars have been on fire in 2016. This is one of those potential year-end December seasonality plays. From a low of 26, we're up to 69 here. So, you know, we're talking about close to 150, 200% move. Very similar to what steel did last year, where it had bottomed and then made this huge run. Now solars are doing the same thing. I've actually got two solars I'm watching. I didn't put SEDG on our list, but SEDG has also been fantastic here. It's actually been made more of a percentage gain than FSLR has. FSLR will go with that one. My entry was right around 68. Basically a trend breakout pullback. We've got the big trend. We had the breakout here, pulled back to the 9, held. I entered on this day. We're up about a point right now. This one, we're going to play through the breakout. So a lot of these guys, I like to enter on the pullback, take the profit at the top of the range, and then if it breaks that range, I'll get back in. But FSLR has proven when it starts to move, it can really move. So I'm going to try to hold through this breakout. What I'll do is, if it gets up to 72, I'm going to make it a basically no-lose type trade, kind of a lotto trade. So I'll put my stop. My entry was 68. If it gets up to 72, I move my stop up to 68. So it's essentially going to be a break even or a big win. And hopefully then it would run to 79, 80, 85, somewhere in there. So that's a strategy for the sense that I'm in it right now. But you guys probably want to know, how do you trade it now? I think you could get in right now. So it's sitting at the 9. It pulled back again, showed some strength again, showed some strength today. Give it a little bit of room. Sometimes there's some back and forth here. But say you entered tomorrow at 69. I would place a stop under the low, maybe at 66. 67, which is where my stop is, right in that range. And then again, play through the breakout on this one. Now, if you don't feel comfortable doing that and you want to see some more confirmation, to the high. So just mark 72, set an alert in TC2000, just go to alerts here. It'll ping you when it gets to 72, and then you can jump in at that point. That's FSLR, that's Solars. You can also look at SEDG. Now let's take a look at BABA. It's only China stock I have on this list, although there have been a lot of nice China movers in 2017, but BABA's the big one. If you look at this pattern here, it looks almost exactly like some of the FANG stocks, and it's the exact same strategy we pointed out for Netflix. So 9 is below the 50, which we don't want to see, but it's proven that it's not a big deal for this stock. So our trigger is going to be exactly like Netflix. If it breaks to 180, I'm in. Now, you could take profits at 190 or go for the bigger move. I think we're okay to go for the bigger move because we've had a couple of tests here of the highs. And once we've tested a few times, if we can get back to that level, oftentimes we see that break. So it would be the same thing. Well, two strategies. One, take the profit and then re-enter if it does break out, or just try to play through. So really simple trading. Don't complicate these things. Two very simple strategies. If it gets to 180, get in. If it gets to 191, get in. So very simple trade here with BABA. Now let's go to Grub, internet content. A lot like some of the lower float stuff, and it's at 75 million, so it's low float, but not that low. But you can see how some of these low floaters can move. So this guy here has moved since January from about 18 to 71. So that's what, 300% move. Little concerned right now in the sense that we are getting a reversal candle. This is actually a short signal, kind of a runner short. So when we get these big moves and we get a reversal candle like this, I will look to short. Probably not going to do that here because of December seasonality, but I would expect a pullback here. So what we're going to look for in Grub, one, if it reverses this right away, we would play the break of the high. That would be an easy trade. But more than likely, we're going to test this old high or the 50-day moving average. So mark two key support levels. Mark 64, if it can hold that level and show some strength, or if it pulls back even deeper to 57, you could look at that spot as well. Okay, NVIDIA. I'm also in this stock here. Entered at 190 on the break of the 9 EMA. And now we're going for a move. You're seeing the same pattern here with BABA and Netflix. So huge runner throughout the year, has pulled back below the 50. Looks like it's bottomed here. We played this one a little more aggressively than the other two. Part of the reason someone alluded to here, because it is somewhat related to blockchain, so it could have that impact. And semiconductors have been on fire, leading the market through most of the year. So this is a prime candidate for December seasonality, especially if it gets over the 50-day moving average. What I'm going to do here, my initial plan was actually to play through a break of the 50-day moving average and maybe take profits here at 218 or even higher. But what I think I'm going to do now, and what I've been talking about in the report, is we got that move from 190 to 195. If it gets up to 199 or 200, we're going to book that 10 points. It's going to be a $2,000 gain. And then we'll get out. And then if we do get that break over the 50-day moving average, we'll get back in. So we might give up a point or two here, but it's worth it, I think, in case it pulls back down below the 50 because of this resistance level. So essentially, it's like one trade broken up into two. So we get out at 200. If it breaks 201, we get back in and play it to 220. Again, really simple trade. Don't complicate these things. There's a nice trend, very easy levels to gauge and enter on. Race. Race is Ferrari. Probably buying this stock is the only way many of us will ever own one of these things. But you can see here, it's been on a tear since 2016. And when you thought it couldn't go any higher from 34 to 60, 2070 went from 60 to all the way to 120, 100% gain. Now it has pulled back pretty deep. But again, these pullbacks have been buying opportunities. So we're not just going to guess here, but if we get clearance of key levels, we're going to jump in. So Even though it seems like 112 is away, 111, 112 is ways away, this thing can move very quickly. Probably not December seasonality, but early January, I would imagine that we're going to get up over 111 or 112. If we do that, I'll take a shot here to the top of range at 120, get out, and if it breaks that high, I would get back in for another big run. And when it, if you see here, just look at the high breakouts. What has it done every time it high broke? We saw a high breakout, 55 to 70. Here we had another high break, 70 to, you know, wherever you want to gauge where it went to. Huge moves in race. So keep this on your radar. Alert yourself at 112 or 113. If you get that, you want to be in race. All right. We're going to go to a little bit of a boring stock here in Caterpillar. Really heavy float, you know, almost half a billion, 588 million here. But surprisingly, it has been moving pretty volatile here. So January, it was at 90. It's up to 154. So that's a 50% move in a heavy float stock here. So normally, you know, I don't want to trade one of these really heavy stocks as a momentum play. I do have Caterpillar in my long-term accounts. But this has been a good swing as well. So if one of these heavy stocks proves to be a mover, we can jump in on them. So a little extended at this point, to the point where we might get a run or short opportunity. So, you know, our focus right now is longs going into December seasonality. But if we get this move, say it pops to 158, then puts in a reversal candle. And when I say reversal candle, I mean, you know, like a inverted hammer, bearish engulfing. We could actually do a quick short, counter trend quick short. But in the meantime, we want to see a pullback here for a little better value. Pullbacks have been bought up in this recent trend. So if we pull back, test the 149, 150, we could look to get in. Tesla, now Tesla's been a dog of late. So if we look here, maybe, just maybe, this is a double top. You know, we had this big run, kind of a, if you want to see this as a head and shoulders, we could be seeing that, or a double top. But this is also, even though, you know, there's this one would be a double top. Two is this is doing what Google, Netflix, Amazon, Facebook, Apple all did early when they were younger stocks. And Tesla's still a pretty young stock, and it's only 100 million float. So it still is pretty low float. But a lot of these guys, they looked like double tops, but they would always invalidate that setup, never follow through when it looked like they were about to, and then break the highs. And when they break the highs, they go on huge runs. I'm talking, you know, if Tesla breaks 385, I wouldn't be surprised if this thing goes to 500, 600, or 700 over, you know, maybe a period of months. That's how quickly this thing can move. And we saw it here. You know, it moved just this year from 190 to 300. So you can see these kind of moves. So how are we going to play it? Initially, I was going to play the 50-day moving average break, just like the other stocks we're talking about. But the volume pattern hasn't been great. And that price action post remount has not been that great. So I definitely want to see more strength. I want to see more positive volume coming into the stock. If we see that, I'll get back in. I don't have exact triggers for you on this one. Those of you who are Trade Report members will talk about it. But basically, if you're doing this on your own, you want to see breaks of ranges and you want to see volume picking up, which we're starting to see. But I want to continue to see bigger green volume than red volume. And I want to see the green volume breaking over the average. This white line is the average volume here. So if we start to see that, we can get in before the break of the high. But eventually, if we do get the break, like say in January, we get up here and test 386. If we do break this level, and it would be the third time, I think that would set up a huge run. So keep Tesla on your radar. Probably not one that we're going to trade tomorrow or next week, but definitely when we talk about early year trends, Tesla will definitely be on that list if it can start to show some strength here. All right, we talked about Amazon, we talked about Facebook, we talked about Netflix. Apple, you know, Apple is in my longer term accounts, but honestly, I don't swing trade this much anymore. It doesn't move with the amount of volatility that all these other guys we've talked about have. I mean, it's been nice in 2016 in that it's moved from 122 to 175, but again, that's a 50 that's probably a 30 or 40% move when I've got these other stocks that move much quicker. So I don't trade Apple for swing that aggressively anymore. Now, if you trade options, you can still get the added volatility. And for longer term trades, watch the break of the high. If it breaks 176, 177, it could be a good entry point for the next big run. And it's consolidated for quite some, although it's been floating higher, I would consider this one consolidation here. All right, we talked about Google. Let's talk about a couple of the metal stocks, and then we'll get into energy as well with DO. So FCX has been on fire weeks here, has made a move from 13 to 18. Definitely an area we want to be paying attention to, but definitely extended. Worst time to enter right now. So on our watch list, we're watching this closely, but we need a pullback. So we're going to watch for a pullback entry and then either show strength or a break of the high. And you're seeing a theme here when these things get extended, look for the reversal candle for a quick runner short. When I say quick runner short, we're not predicting that this is a dog stock that's going to go all the way back down to 13. But let's say this popped up to 19. We get that reversal candle. We could maybe ride it from 19 to down to 17 or 16 for a quick, nice quick kind of grinded out short trade. So that's FCX. X, not quite as strong, but has made a nice move. What I would watch, a couple of things at X. Going into next year, watch for the high break. This was the early 2017 high, which is not the all-time high because it made all-time highs way back in 2008. But since then, this is the high. So a really, really important level here at 40, what we'll call it, let's get the exact number here, 41.15. So intraday high, 41.83, let's say 42. If it breaks 42, that could set up one of these huge runs. And you see this way back when, early or late 2016 after the election, it ran from 17 to 37, so 100% move. We could see that again. I wouldn't be surprised if it breaks 41, that it gets up to 60, 70, 80, or 90. So be on the lookout, an early 2018 trend to watch. And in the meantime, we could play this to that level if we get a pullback. And that's the only way I would really trade it right now is if we get a pullback. So, or a break of the all-time high, which could come later, maybe in a month or so. All right, DO, energy has been on fire. Let's look at the energy ETF, XLE. You can see here, bottoming. If we look here, whoops. If we look here, it has made, it was on in a downtrend, made a low at 62, and now is up to 71. Today was actually a good spot in here where it was breaking 70. I was watching this intraday, and by the end of the day, I felt like it was too high for me to enter compared to where I want to place my stop. So, this gives you a lot of back and forth. So you need to use a loose stop here. Entering at 71, 80, I stopped down at 68. I felt like I wasn't going to get the reward to risk I wanted. So I'm going to wait for a pullback here. But there are some stocks. DO is one of my favorites here. Just broke the high today. If it pulls back in here, we could get a good entry. And you can see this thing just recently ran from 10 to 18. So I wouldn't be surprised here if we get a run from, say, 17 or 18 up to 24, 25. So really explosive, potential for an explosive move. All right, a few more here to go. Let's talk about GWTH and somewhat related to marijuana stocks as well. And it's a little bit of a difficult stock to trade. Even when it runs in its trends, there's a lot of back and forth there. But when it does move, you get these explosive moves. So what I'm going to watch for here is a pullback and a break of the high. I'm not going to buy on the pullback because, as you can see, a lot of these pullbacks are fake outs and you get these big moves down, and I don't want to get caught in that. But if it breaks the high, I'll get in. So we've got, you can see this line here from a previous trade I took. But if it breaks the high here, at 137.50, we'll call it, or 138. We're at 134. It could happen very quickly. I would look to get in, and then we could see a really big pop. I mean, look at the last kind of high break pop. Went from 97 to 135. So we could see a big move here in GWPH. This could happen pretty quick. So have this on your radar tomorrow and next week. All right, Macy's, boring stock to trade, but it has made a big move. These big box retailers department stores have been crushed. You can see here, 2016 made a high of 45. We were all the way down to 17, but now look what happened. 60 million shares came in. What does that signal to us? That signals to us it's not us little retailers, the retail traders who are buying this up, it's the institutions. So we got the big move, we're consolidating over these key levels. Now I would watch for a break of this range here. So if we can get above 26, 25 to 50, we could see the next big move to maybe 30, 33, 35, 36. So keep an eye out on Macy's. There's some other ones you could be looking at, and these are all sound like boring stocks like Kohl's, but they are moving. JCPenney's, and even some of the specialty retailers like Guess, Ralph Lauren, they're all putting these kind of moves in. So there's a bunch of good retail stocks to choose from. Gap as well has made a nice move too. So keep an eye out on all these retail type stocks. And if you want to do your own research, go into apparel stores, and there are a ton of good ones in here. So keep retail on your radar. They're starting to move. Okay, LTEA. This is the ridiculous stock we talked about early on. Long Island Iced Tea is now Long Island or Long Blockchain. So huge move here. Plenty of dumb money probably coming in here. If you can short this thing, there's going to be a great short opportunity. I guarantee it. But you have to be careful that you don't get crushed before that. But for those of you looking to do the hybrid swing day trade, if you're in a day trade, so let's say you trade 5,000 shares of this, you book this huge profit, maybe keep 500 on for a swing trade. And you've got that buffer. So even if it did gap down on you, you've made so much profit that it's not going to crush you. But at the same time, if this thing were to gap up to 11, 15, you're in it for a nice swing. So that's, again, the strategy with LTEA. In terms of specific day trading strategies, you guys can go to Canal for that. Okay, UA, Under Armour. I just took profits in this guy. Been beaten down. It's been crushed here. It's one of my favorite apparel companies because of Steph Curry. But if we see here, we traded this as a gap down reversal play. So we had the gap down, continuation. We had the reversal here, and then I entered in here, 1168, 1329. I still have my notes here for a nice gain. Now, and then we took the profits up here on the pop here. And usually on these things, I get out before the gap fills. And now we're starting to get to this level. And what I want to see is strength at about 1420. If it can hold this level, it basically invalidates the breakdown. And we're going to set up a big run. Now, what complicates it is the 200-day moving average right here. But still, if you enter here at 1420, you have up to 1630. That's 2 points on a $14 stock. That's a pretty good percentage gain. Then you could get out and get back in if it breaks that level. But it looks like we have more potential reversal in Under Armour. So keep this on your radar. We're not going to guess. We're not just going to jump in here. But if it proves to us that it can hold 1420, we're going to be in. Okay, Roku. This has been a fantastic mover. Another win for us. We entered around here. We exited around 50. I think it was 51, 52. It ran up to 59. Now I'm looking for the next high break. And that's with these early IPOs. You can see it IPO'd here in October. That's the go-to strategy before the lockup expiration, when the insiders can start selling. Just play every single high break. And we're looking for that again. So if this thing crosses 60, I'm going to be in, and I wouldn't be surprised to see a move to 75, 80, or 90. So Roku, definitely on our radar. Also been a fantastic day trade for you guys. A lot of volatility in there. You can apply, the strategies you've learned in the boot camp to trading this as a day trade and hybrid day swinging, and also just swing trading the high breaks. All right, LFIN, another one of the blockchains we've talked about. Now this is blockchain and IPO, but same strategy here. Be careful of halts. There were 2 days where it crushed a lot of traders who were caught in these halts. So be careful of that. Now, FAS financials, which can be boring to trade, but this is the leverage ETF, so you do get that extra leverage. And near all-time highs. The fact that the Fed has indicated more tightening is actually good for financials, which logically doesn't seem to make sense, but that's what the people in this area say, and that's what's been happening. So we're going to go with that. And you can see all that volume coming in here in late November, consolidated here. We're going to wait for the next high break. Get that next high break. You can see this high break when this went from 62 to 72 or 70. Now we'll look for a break of 70 to maybe 80. So financials definitely on our radar. Now you might be asking, why is Goldman Sachs not on this? Why is Wells Fargo or any other bank stocks? Because this leveraged ETF moves faster than those stocks do. So I prefer to trade the leveraged ETF for these quick swings. Finally, VIX. This is if the market tanks, we could see a big spike in VIX. So keep an eye on VIX. If for some reason, I don't expect it to, but if the market tanks, we're going to take not a big position, but we'll take a position in VIX. All right, guys. So I think I ended up going over about 35 stocks. We're going to go over 21. This sets you up for late December and the new year. So this whole list is going to be not only good for now, but it should be good for January and maybe even February. So you've got a base of about 30 stocks to watch and trade. You could just trade these and look at nothing else. And you have a pretty good odds that you're going to make a lot of money. So thanks for showing up, guys. We're going to do more of these YouTube lives. Next time I'll have it all down a little better. And we're also going to do an end of 2017 webinar going over my statistics on all of my trades in early January. So keep a lookout on that. And remember, guys, you can sign up for the Swing Trade Report. Go to Swing Trade Alerts, and all the information is here for you guys. All right, guys, this has been fantastic. I will see you guys next time. Happy holidays.